Good morning, everyone. And thanks to ICMA and the Executive Committee for giving me this opportunity to talk to you all. I think this topic came up in the last panel as well about the importance of SPO providers, if you will. I was thinking it's not exactly a profession that puts anyone at risk of landing a date at a dinner party. And I checked that. But I think for this crowd, the changes to what this particular role could be expected in the next few years is quite relevant. And what I'm going to do is I'm going to talk about three trends that I see in the label markets today. That's going to be familiar to all of you, but I want to emphasize certain points. And then talk about three key takeaways for what it means for SPO providers. So first of all, the market has flatlined over the past 4 to 5 years. And in fact, if you look at Q1, it was even down significantly compared to last year. We are hearing some encouraging news about Q2. We'll see to that, but there's no question that the trend is largely flat. The number of new issuers has declined significantly, especially among corporates, and the market is more and more reliant on sovereigns, agencies, and repeat issuers among corporates. I don't want to be too negative, right? And I do think it's very notable how much this market has been resilient in the face of a number of shocks that nobody expected. Pandemics, wars, and sort of an unprecedented energy supply crisis. We are talking about global tariff wars and trade tensions. We're talking about defense and security concerns. In fact, when I put all of that in one line, it makes me wonder how all of us got off our beds in the morning every year for the past few years. So it's impressive that the market has been resilient against all of this. But one thing is clear, the era of easy growth is over. We had really heady growth from about 2015 onwards through 21, 22, right? That period is gone. And any future expansion must come from hitherto hard-to-reach sectors, in hard-to-reach geographies as well, and perhaps newer instrument types. We've seen the transition label come forward, but perhaps from some of that. But not just that. Any growth with the virtual disappearance of the greenium, right? Any growth also has to come from other perceived benefits. We can't any longer count on greenium. And those benefits could be access to a wider pool of investors. It could be just a corporate investor outreach strategy. It could also be, signaling to the market about a potential transformation of the business model, right? It could be any of these things, but it has to be topics like this, and not a reliance on pricing benefits. The second trend I want to talk about is we are in the age of what can be called as pragmatic transition. So again, going back to some of these headwinds, we have a war in the Middle East. We have Europe pivoting towards focusing on competitiveness and energy security. We have Asia still focused on energy prices and trade tensions, right? So the policy environment around transition has become enormously complicated. And there is no discussing transition today unless it's within the framework of energy security and economic concerns, right? They have to be concerned. So that has changed a lot. We are also seeing at the same time a huge surge in the demand for electricity, particularly in the US and in Asia, driven by digital infrastructure, but also by broader electrification of the economy. So if I may use this word, what we are seeing now is an energy everywhere policy. And what that really means is that goes into the heart of pragmatic transition. So it's not just about these concerns, but also there's so much demand that transition has to be viewed in that light as well. Thirdly, we have also this interesting phenomenon that renewables continue to be really, really economically competitive. And their growth is now largely driven by economics, not by policy choices, right? So talking about transition kind of needs to bring all of these together. And you need to go beyond just a green and non-green primary. So talk of transition, and that came up as well. So that's the second point. The third thing I want to mention is that complexity in the markets is rising fast. What I mean by that is there's numerous taxonomies that are coming up. You have the ICMA standards, very broad standards like that, EUGB and so on. But you also have large number of national and regional taxonomies, thematic taxonomies, blue bonds, Amazonia bonds, etc. In fact, I looked at ChatGPT and it told me that there are something like 60 taxonomies globally, 60. And this morning, somebody told me that ICMA is setting up a working group to come up with the 61st. But what we are seeing effectively is that every stakeholder, every country is coming up with their own taxonomy to meet their own needs, right? In some ways, it's fine, right? And SPO providers can opine on alignment with any of these taxonomies along with ICMA as well. But the point is, these, and I think it came up in the previous panel as well, but the point is, different taxonomies may see the same asset differently. So it's not enough to just say, yes, you're aligned with taxonomy X or Y. For the sanity of the market, somebody needs to make sure that the fundamental contribution to sustainability of these assets is also conveyed, right? Even though you may also at the same time say, yes, it's aligned with taxonomy X and taxonomy Y. So what are the key takeaways for SPO providers? How is this going to evolve, right? So we spent at Moody's the last several months talking to a wide range of parties in the market, issuers, investors, intermediaries. And of course, we have no idea when the market for labeled debt is going to start growing again, or in what way it will start growing again. But I think there are three clear kind of themes that came out to us, and I want to talk about them. The first is the market needs nuanced analytics. So what that means is decision-useful opinions that are comparable across sectors and across geographies and can help channel capital with confidence without worrying about greenwashing. Perhaps nothing exemplifies this better than the transition bond guidelines, because for the first time, we are seeing SPO providers being explicitly asked to do entity-level analysis, to be asked to be aware of regional pathways in addition to global pathways, to be explicitly looking into making sure there are no carbon lock-ins, that's use of the best available technology for a given region, and so on. It's very nuanced. In fact, in a way, it's kudos to ICMA for really elevating the level of analytics that is basically a requirement now in this topic. Moody's has published 3 public transition label SPOs, 2 for banks, First Rand in South Africa and Riyadh Bank in Saudi Arabia. And then just in time for this conference, a few days ago, a first corporate label SPO, a utility, CLP Holdings in Hong Kong. It's a primary, largest utility in Hong Kong, but they also serve many other Asian countries. But what I'd like to emphasize, if you look at these 3 categories, we have looked at a large number of the most important categories that we all talk about as being transition-oriented. And let me just read that list to make sure I get all of them. Cement, aluminum, agriculture, aviation, shipping, metals and mining, carbon capture, chemicals, coal-to-gas switching. The last one is kind of obvious, but all of these others are really the hard-to-abate sectors that we all talk about. And these frameworks have taken some time, at least to define what sort of projects they are looking at. Right? We'll have to see when the projects are actually implemented, what happens. But they've at least taken time to define it. So it is, I think, doable. And it's a good sign that these sorts of sectors can be handled. But let's look beyond transition. If you talk about adaptation, if you talk about water, biodiversity, these are growing sectors. But they are even less standardized in terms of metrics, in terms of disclosure than transition is. Right? It's probably easy to say that all of these are green, yes, and I think most people here would agree. But there is a need to actually differentiate the impact of one project may be very different from the other. And that difference is going to be important going forward. Again, it means more nuanced analysis. I don't know how many investors are in a position to have resources dedicated to do this analysis in-house. Right? Maybe there are some big investors to do it. But I think, in general, SPO providers are very well positioned to provide that sort of more deeper view on the contributions from each of these projects as well. So I think, if I may summarize this view on nuance, in a line, I would put it as follows. Second-party opinion providers need to become first-party opinion providers. What do I mean by that? Second-party opinions essentially means an opinion on alignment with somebody else's standard. That's not going away. That's absolutely needed. Not just ICMA, but regional taxonomies as well. But increasingly, what the market needs and what the SPO providers need to be able to provide is a first-party opinion or their own opinion on these various investments and the quality of their sustainability. The second key takeaway is on service quality. We have seen this market consolidate towards rating agencies particularly in the last a year or so. There may be many reasons for that. I won't go into that, but I do want to point out that there are two very significant factors that have contributed to it that speak to the service quality and that is important to both issuers and intermediaries in particular. So the first is that rating agencies have strong pre-existing relationships with issuers already. And that actually allows us to provide a lot of this nuance in a much more credible manner because we know these companies really well. And so looking at their business models, talking about nuance, providing entity-level opinions in addition to instrument-level opinions. So that's one factor. The second factor is kind of related. It's that when one entity can provide both a perspective on credit quality and a perspective on sustainability quality, I think that supports easier execution in the capital markets. In fact, that is precisely the reason why we have, at least at Moody's, the SPO business located within the rating agency itself. So I think those two are important kind of service quality points that also came up in the dialogue. And then last point that I'll emphasize before I close, it's perhaps, I would say, even more consequential than the other two. And I want to talk about reputation, rigor, and credibility. Probably some of you are thinking, Swami, you're being Captain Obvious here. Right? Reputation, rigor, credibility obviously are important. Credibility does rest on analytical rigor and providing deeper insight. You can no longer do check-the-box analysis on compliance or alignment with something. I've talked about that already. What I really want to emphasize is a deeper layer of credibility that goes beyond analytical rigor and speaks to analytical independence. What I mean by that are things like, does the SPO provider separate commercial from analytical activities that are associated with the SPO business? Is there very strong conflicts management at the level of the SPO provider entity and including at the level of the individual analysts working with respect to the entity being evaluated? Is there full transparency on methodology? And there are a few others, but these are probably the most important ones. These features, in my opinion, are not always the focus today in evaluating and selecting SPO providers, but they ought to be. I think voluntary, disclosures on codes on conduct, on operating policies are important, but they hide deeper operational differences between these entities. So I would say that in a market that cannot afford greenwashing risks or other credibility issues, it will be a lot more important to focus on these topics going forward as well. So in summary, I think the market has matured into something that's more complex, something that's more pragmatic, and something that's more demanding than it was a decade ago. The ICMA principles provide a fantastic foundation, but what is built on top of that requires SPO providers to provide deeper analysis, stronger independence, and a better institutional framework to support the growth of this market. Thank you very much.